Hey, good morning. Let's review today's trade plan. So in the overnight session, we were using 51 to 53 as the bull bear zone, and the market held above that area and slowly made its way up towards the 58 to 60 resistance zone. So at this point, heading into the open, as long as ES can hold above 52 to 54, our bias will be for continued upside. 58 to 60 is really the only hard resistance at this point, with the all-time high at 1960. And given that NQ broke out to a new high yesterday, as long as the buyers hold it up well above 52 to 54 today, there's potential for S&P to make a new all-time high. On the economic calendar, we have the ISM number out at 9 a.m. Central, and that can serve as a catalyst for a directional move. And we've also been more or less balancing in a relatively narrow range, and because of that, that can also add to the directional move regardless of which way it goes. So the idea is that as long as the market stays above 52 to 54, it's pretty high odds that we'll break out above 58 to 60. And in the event that we get any decent kind of move below 52 to 54 on any decent momentum, then it would tell us that this market's weak. It could shift the control to the sell side, and we could get a short-term liquidation move down to at least 46.5 to 48.5, but most likely at that point the market will probably go lower and test 42.75 to 43.75 and even 39 to 40. So this 52 to 54 area is pretty key short term here for buyers, and that's really what we're going to be keying off of this morning, and just watching, whether ES is able to hold above the micro bull bear zone, and then if it breaks below on, again, any kind of good momentum, weakening internals, then we'll know that this could be a market that's setting up to make a reversal and go the other way. And on the upside, above 58 to 60, there is no hard resistance. 1960 is the all-time high. So in the event that we get a breakout above that zone, given the recent volume and volatility, we can expect to move at least up to 64.75 to 66.75. But if the volume really picks up, then even 71.25 to 73.25 is possible on the day time frame. That's not really too far out from where we're trading right now. And at the same time, we will be keeping an eye on the other markets, making sure that NQ sustains its recent strength, and same idea with the Russell. The overnight session has been pretty strong, and we want to see a continuation of that. We don't want to see a breakdown in the other markets either. And if that happens, that'll be a red flag that the S&P could be going the other way as well. So basically, just keep an eye on 52 to 54, see where it's trading in relation to that. We are at the upper end of the recent range, so this is an inflection point. Either we're going to get a breakout, or it's going to be a failed breakout, and then we can head the other way. So those are really the two primary scenarios, and these are the levels that we're going to be keying off of. So let's keep the econ releases in mind for the morning. Let's keep 52 to 54 at the forefront this morning and see how well the buyers hold it up, and we'll take it from there.